Okay, so let's talk through how I got funded with 100K in just 2 days. I'm ready for the crazy hair comments, but let's dig into how I got funded with 100K with True Forex funds in only 2 days. I have two ways of trading. I have an aggressive way of trading and I have a simple way of trading. In the simple way of trading, that's how I do in my funded accounts, and that's why I have lower returns in my funded account. While when I'm doing challenges, I'm being very aggressive, which once again, if you've seen the channel and if you've seen other videos such as this one and this one, you know that in challenges I'm very aggressive. I go into the 1 minute and I go into the 5 minute. And last week there were high impact news that I knew that I wanted to trade, and so I bought a challenge with True Forex funds, which I know was going to give me the best trading conditions in general. And now that they had the no minimum trading days, which you can check the link in the description, and also no more time limit, I decided to give it a shot. Not to forget that it is a business expense, and if I lose it then I don't really care because I have $300,000 already funded with True Forex funds, not to forget the other one. And so I decided to take the risk. So right now let's jump onto the screen and make sure to see the trades that I took. Okay, so this is the phase 1 stats, this is the phase 2, and these are the trades that I personally took. So let's break everything down and let's see how all this happened. And it could have happened quicker. There's also going to be a certificate popping up because everyone says that everything is fake, and so hey, it is what it is. So on phase 2, I had two trades which basically were a break even. This is a break even, and the winner that got me over the profit target. You can see that both of them were buys, and you can see the breakdown right here. This was a one position in of itself. And then on phase 2, we have one trade that was also a winner, 50 lots, which resulted in the full win. Now, one of the things that everyone needs to understand is that I'm trading these accounts very aggressively. So when I'm entering in 40, 50 lots, this basically means that I'm risking 4% if my stop loss is 10 pips, which means once again that this is high risk, high return. And that's what I always say when I mean that when I'm doing challenges, I either want to pass quick or fail quick. This is exactly what I mean. I'm risking like 4% on phase 1 and 4% on phase 2, because like that, it's a 1-to-1, it's a couple of pips, and I either pass or I fail. And I have 3 shots in order to fail, and I have maybe one winning trade that may take me over the win. So let's dig into the charts and let's see everything that happened. We're going to start on Tuesday, the 11th of July, and what you can see right here is that this week was very bullish, right? We have one trade here, 11th, 12th, and 13th. All of them were buys. Why? Because the weekly was looking really solid in order to clear out these highs and clear out this high right here. So that was my target for the week, and this high is going to be important. So let me put that in blue because we'll understand why this is important. We also have this volume imbalance right here and the order block right here. That's why the weekly bias was so clear in order to take out the highs. Not to forget that we had this big bearish first move that tapped the fair value gap and then finished bullish. So my bias for the week once again was bearish Monday, bullish rest of the week, and that's exactly what happened. While this week I'm more so kind of more in the sidelines because I don't really know where to go from here. So on the daily, let's go back to here, and we can see once again that the target was this high and these highs right here, and so I wanted to position myself bullish if I was able to get a good entry right here at the wick. Because if you think about the power of 3, this is the area that I want to enter. If I'm bullish for the day, then my goal is to enter while the day is bearish. If we go on to the 4-hour, you see that there is this area that I'm looking for, but there's also this fair value gap on the 4-hour. So this is the wick on the daily, don't forget. And where did I position myself? I positioned myself on the wick with the target that would be the highs. So that's something to keep in mind. Even though we had already swept these highs, but I was still targeting the overall highs right there. So if you go onto the 15 minute, we can see that there was this big bearish push on the day that then ended up tapping these two down close candles and did not tap the order block that we had right here. But there was this shift in momentum as we tapped these down close candles, and you can see that we closed with a candle above this previous up close candle. So this to me marked the market shift. And so I went onto the 4-hour and I was like, okay, we've tapped the fair value gap, we've had the market shift, now let's look for trades. And so I went onto the lower time frame. I saw that there was this clean fair value gap that had already been tapped into and had a good reaction from. And so my goal was to position myself well into the 50% of this down close candle right here. And that's what happened. We didn't have a fair value gap, but we had a fair value gap right there at the low. If we push this a little bit forward, we had this big push up and this big bearish candle, which came directly into the fair value gap. Then we were basically just hanging around. There was this big drawdown because I had a 10 pip stop. You can see it right here. We had basically a 75%, an 80% drawdown. And that was one of the reasons why I took the break even, which is this drawdown. Once we saw this big impulse, I was like, okay, now let me start protecting the trade, because it was already like almost 4 p.m. so the kill zones were over. London close was about to happen, but after London close you didn't have a lot. And here I was expecting a loss because there was this low to get swept, and we had already broken through this fair value gap, so I was expecting this to act as resistance to break the low. But eventually this started impulsing up. We were then always basically coming back into this down close candle on the 5-minute and reacting from there. Once I saw this big push up, this is when I thought, okay, now we have swept these highs. Let's put this. We have swept these highs. We have this breaker. We have these down close candles. And on the 15-minute, we also have this down close candle right here with the 50% of this wick being above my entry. And so I moved it to break even. So what ends up happening? I get tapped right there. That's where I get tapped out for break even, and then the market just decides to move up without me. This would have been the TP for the phase 1, and it was hit 1 hour and 20 minutes after my break even was tapped. And so it was kind of frustrating, to be fair, but I was like, okay, let's not worry about this. Let's just focus on the next trades that are to come, because there's still a possible big move that may be coming. And that's exactly what happened. So let's move on to the next trades. So this was the other day where I was expecting this big bullish move to target these highs. And on the 12th of July, we had CPI right here that came in lower than expected, which is bad for a currency, which means good for euro dollar. And so I saw this. And I saw this breaking above the 1 hour and coming into the breaker and all that, but I did not want to trade through news. But what did I know? I knew that I wanted to trade into this high. And so what I did is I waited for CPI. I waited for manipulation of CPI, which was this down move right here. This is where I wanted to position myself to then take advantage of the continuation of the move. But right here, I traded on the 1 minute. So we have the big push higher through CPI. We had this break higher, so making this higher high. We had this fair value gap in this order block right here. So my first entry was right there, which if you see right here was a smaller entry. It wasn't a 40 pip. Why? Because I knew that there was this big possibility of the market going much further down, manipulating the longs before actually going longs and getting people short too. So I entered in a 20 lot, which allowed me to risk, well, 4%, but have a 20 pip stop loss, which was the thing that kept me in, because look, a 10 pip stop would have manipulated me out. So we have this push down, I get actually tagged in, and this starts reacting, but then price starts moving lower, and I was like, okay, maybe we are coming back into this. Maybe we may break the low further and break these lows. But that's when this momentum came back into the market. We have big push up, down close candle, and then this candle right here that I'm currently pointing to closed above this down close candle. So this is where I knew that I wanted to execute on another long, because now this is where I'm expecting the move to happen. And so I entered on another trade, but what I started doing is, again, only risking 4%. So my stop loss right here was at this candle low, and I was able to reduce this to this candle low. And once again, why did I enter in this aggressive trade? Because I knew that I was either completely wrong and the trade was going to reverse on me, or price had already had this run lower to now just move up, and that is what happened. So there was the precision of the trade right here, reduced trade right here, which basically allowed me to only have to bank on 20 pips in order to pass phase 1, and that is what happened. So 1 break even, and these were the 2 winners. Now phase 2 was similar because we had a big week, And on Thursday, we had PPI. What happens during the PPI and during news? Once again, we have manipulation. I'm looking for longs, and I'm looking for manipulation shorts to enter in longs. And what happens during news? Manipulation. So if I'm looking for longs and I'm looking for a break of this high, which as you can see happened just before PPI and after PPI, so I look for the manipulation short. I look for strength, which is what you see right here, and the fact that this does not break the low. We have this big push up, which on the 5-minute marks this market shift with the candle. So I'm now looking for longs, because one of the things that I've noticed, and ICT says this, is that when you have a big push down and we have a retrace, normally price retraces and sweeps above this high. So if I'm seeing that there's inherent strength, then I'm looking for prices to sweep these highs again. And so that is what we got. We had this strength, and I was looking for something to target these highs and pass the challenge, and that's why I entered into trades. So let me explain. The first trade that I was looking for was right here at the fair value gap, but we didn't get to the fair value gap. So once I saw the tap right here and this injection of momentum once again above the high, I was like, okay, so now we have this market shift once again with the candle plus this fair value gap and the order block, and so I want to enter here. So I entered a little bit below the 50% of the fair value gap, and I entered with 40 lots because again 10 pips was enough, as if this was to continue breaking lower, then okay, I'm done here and price probably is going to take out even 20 pips. Now, one of the things that I noticed after I entered in this trade is that we had already broken above the week highs. And so I knew that I wanted to enter in a trade that I didn't need a big move. So 40 lots would need me a 12.5 pip move, while 50 lots would make me need a 10 pip move. And so what ends up happening is that we have this continuous market shift right here, another fair value gap, overlapping fair value gap 2 right here. This trade I had already reduced to here, and so I enter in an extra 10 lots, which now the risk was only 2,500, which it's 2.5%. But again, I entered right here, and then price just ends up sweeping above the high and tapping full take profit. And that is how I passed phase 2 and only 1/2 trades. So basically there were both just 1/2 trades. So yeah, that's how I passed a 100k challenge in only 3/2 days. And I hope you took some value from this in terms of technicals. So now, just as a reminder, I think this is very important, which is the fact that once again, in the video that I made about being funded with 7 figures, I talked about unfair advantages. And one of them is that I don't want you to do this that I'm currently doing if you are not funded yet with $500,000. And the reason for that is because it takes time to develop the skills to get funded and to be able to do this and also play with the numbers a little bit more. Like for me, 400 euros was not only a business expense, but also it doesn't really matter in the grand scheme of things on my trading. But if you are in a different position where 400 euros does impact your finances, then I don't recommend you doing this. So take advantage of the fact that most prop firms now have unlimited trading days, and take your time with the challenge. Stick to what has been proven to you to be profitable, stick with the systematic approach, and just take things step by step. Don't try to rush it, even though it sounds counterintuitive with the fact that I just talked about being funded in 2 days on a 100k challenge. But understand that there are steps to this game, and I really recommend you going slowly. So I hope you guys enjoyed. I hope you were able to take value from this, and I will see you Saturday. Peace.